We're live.
This is Market Week Live for October 3rd, 2025. Information and support for traders and for investors. Welcome, everybody. Welcome to the people that are our members that are on the Zoom call. You'll get to ask questions, and you can put your questions into the Q&A. For those people watching us on YouTube, well, welcome. Glad you're here. And also, if you want to participate in the Q&A, make sure you become a level 1 or higher member, and you'll be invited to these live Market Week shows. Let's move on. We've got a lot for you today. We're going to bring our express round where our level 1 to 4 members will ask questions, and the floor is yours. We're going to answer them on askSlim services, trade planning, chart analysis, trading issues, anything that you might have. If you're stuck on something, maybe it's something trader psychology related, well, I know a lot about that, so I can help you if that's a question that you have. Matt's going to bring you information on our level 4 special. This is a fantastic opportunity, great deal, and it's non-recurring. So you're going to get a great shot at looking at everything that we do, and then it won't renew on you. So it's just a great deal. So make sure you watch that. And I'm going to bring you a stock market analysis, some of the evidence, probabilistic projections, and price and time. We're going to look at SPX and VIX, and I'm going to look at them in kind of some depth that I think you'll enjoy. And you'll see our proprietary studies and analytical process as I go through that, and the whole team goes through the requests that members are putting up there right now. You want to get acquainted? If you're brand new, get the Stock Index Report Lite. It's free. Just go to free stuff on the top of our website. Sign up for that. No credit card. You're going to get Matt's fantastic analysis every single day on the S&P 500. On YouTube, subscribe to our channel. That's at askSlim Team. Click the notification bell and do like this video. Then give us that thumbs up. It does help us. On X, follow me at askSlim. And any questions you have, write to Matt at askSlim.com. Everything that we do is for entertainment and educational purposes only. We are not giving you advice. No matter how we bring the information to you, it's about information that you can use to learn or bring to your financial professionals, and make sure you always do consult your own trading plan before you decide to make trades. Contact information, well, if you want to know about membership issues or website issues, then you write to team at askSlim.com. For anything on our content, educational information, first-time specials, upgrades, any of that stuff, write to Matt at askSlim.com. Today's hosts, we have our whole amazing analytical team. You can learn about us by going to askSlim.com, about the askSlim team, and meet the team. We're just, I think, one of the best analytical teams out there with just great breadth and the things that each of us lead in our own sections of the askSlim business. So I think that you'll really enjoy what we do. I'm pretty much in charge of the analysis on futures, indexes. Matt does fantastic work on the day trader and putting out the stock index report Lite, and helping our members all the way. Ari does fantastic work in the trade setups, in just continuing to manage all of the huge number of symbols that we look at with Katie. And Katie has stepped now into the longer term perspectives, doing monthly charts, and she's going to bring you just a ton of stuff moving forward. So we just have the ability to do so much coverage and help you so much, and you can learn a lot by becoming by signing up for our Discord channels also. So that's today, and make sure you go to askSlim.com and learn about us at Meet the Team. All right, this is where we take your questions. I see that the questions for me are on Bitcoin and gold and silver. So those are the ones that I'm going to be looking at: gold, silver, and Bitcoin. And then I see there's questions in there regarding the stocks, MicroStrategy, Tesla, and anything else you put up in the next 5 minutes. And I know Katie's got some requests on some monthly charts also. So that's the kind of stuff that we're going to be looking at. So let's move forward. I'm going to take command of it first, as we are going to look at our charts. So we'll look at that a little bit later on. And I'm going to move into the charts here on BTC. Now, Bitcoin, I had been looking at something that was setting up that was quite negative. because I had seen the breakdown that was going on in Ethereum, and we were very close to a breakdown in the Bitcoin market. But that saved itself. You can see right over here where the cycle low was. That's that line. And it came down over here, and it was forming this head and shoulders right in here. Now, you see it's moved up to this level, which is at an all-time high. And that, of course, that is a much different scenario than we were looking at. So these support areas, they now are moving higher as this moves up. So we'll be adjusting that for our members. And of course, this went from the threatening to be a negative scenario into a much more positive scenario. I was negative. I thought it was the highest probability it would break down. But then when I saw things changing, well, it did not. So this is where we were looking at the potential troughs right in here, and you could see where that trough formed. Now the next one is out over here. So likely going to continue to try to rally up in here. There are some fib extension levels that you can see right over here, 128.5, 137 approximately. So this is much more positive than I had seen it just a week ago, as it's moved up well around $13,000 just in a matter of days. Here we see the short-term pattern. Oops, that didn't update properly. So I'm on a little different screen in here. And you could see that this was the scenario in there with the head and shoulders there that we were looking at. But then it improved to this scenario right there. And that is the look at the much improved situation. Again, support's rising. There is a period right in here where corrective trough is due. But first it has to make a high and give us some sense of a high. So that is the look here at this scenario. Again, this peak up over here around 127 on that old high on the daily chart. The daily and the weekly are different when it gives you the peak values, because the way that the Thinkorswim system that we're on handles the rolls. So this was essentially before it rolled, it was up to 127 on this contract, where the weekly peak was over here at 123 and a fraction. So that you can see it made a higher high right over there today. So the Bitcoin, you had this head and shoulders top that was forming, and you can see that it did not form. So that downside projection in here is gone. We're going to remove those. And now all we see is this upward channel that exists in there, with that top of the channel up at around 131 on Bitcoin. I also asked for the gold and silver market. Let me just link this up over here so that these set up properly. And we'll look at gold /GC on the weekly. And here's that analysis. It gets up into the fib extension target zone. There's a level there we've been looking at around 39.90, which was the upside of the range that we were looking at in here. Of course, it's continued to move up. It's up to 39.23. Certainly, we have a situation where there's a move out of fiat. I mean, people just don't want to be long dollars. They'd rather be long risk, which is Bitcoin, Ethereum, gold, silver, platinum, just soaring to the upside. And of course, stock market, AI, they consider that to be ways to head off the scenario that the government is going to have to print huge amount of dollars. I would argue that the equities are not that kind of a place to be safe. But you could see it's certainly showing up in here, the gold market. So that's the resistance levels. The corrective zone right over here comes into middle of November to end of December. So somewhere in here, we'd expect a peak to form and then have some side of a correction. But there is no sign of that yet whatsoever, as you see here in the gold market. Look at as we look here at the indicators. We have on the bottom here the option bias indicator. We have the slim ribbon right in here where it turned positive there, the upward turn in the reversal scout right there, telling you about the breakout that you saw as it get above this level at 35.36. And then, of course, we put in the analysis with the cycle rhythms that we have in here. And you can see here on the daily that it points up into this fib extension level. That's 39.60 approximately right there, and 39.90 on the weekly chart. The next corrective period right in here is in alignment right in there with what we saw on the weekly, which comes out over here into November. So at some point over here, this makes a peak. So you see these yellow zones, that's for the minor cycle and the dominant cycle. Look at, you had almost no correction in here. This was totally swamped by that upward momentum. And then the potential for the bigger correction is out here late October into late November, mid-November, where we could get a correction of both the weekly and the daily cycle. If you look here at this momentum in chart right there, this just blows you away, except that's SPX. I forgot to fix that. So here's the green zone right over here that you can see, where on the gold market, it just kept you on the long side beautifully. So this is a great way to use the slim ribbon, where you use it on an area chart and it just screams at you as to the condition of the market. So this is just a great look at the gold market. Silver /SI, which we have right over here. And I'm just going to show you the reversal scout where it turned up right over here. Here you had a little flattening and then it turns up again. So the reversal scout is just a fantastic indicator. I love it on the weekly chart, but I know our whole team uses it on all of our charts. Let's just look over at the weekly cycle analysis here, and you can see it just is blasted through that fib target zone. And these targets right up over here are 50-20 and 51.46. That's where these fib extensions come out right over here, and just a super bullish market. So again, if we're looking at cycles, this is where the gold cycle comes in, but you could see silver is really out of phase with gold. So there would be a correction somewhere out into next year looking at this, just a minor correction here into November, which aligns with that minor gold correction right over there. So we could get a pullback here into November, but then very likely shooting to the upside again. Here is the daily chart. Let's look in here where the slim ribbon turned up and where the reversal scout turned up. That was back here in August. You could see the option bias indicator on the bottom, keeping you on the long side in silver. Just fantastic when you see that, the way that worked. And then I'm just going to go here to our daily right there, and you could see how the cycles line up in there. The rhythms that are in the market are quite clear. And here is that little corrective period out into October here, and then there's another one out over here that lines up with gold into mid-November. So this probably gives you a little bit of a corrective period in here. So if I were projecting out, I would say it likely is going to go up maybe a little bit more into those zones. And then, well, I do want to grab this, but it's not letting me. Then something like a little correction right in here, and then up again towards the area over 50 in that next cycle right in here. So that's kind of how I would project it based on the shape of this and the momentum conditions. Still looking exceptionally bullish as we look there. Look at the silver momentum chart right over here. I'll just maximize that for you. Here's that period where that reversal scout went neutral, just moved sideways, and here you could see the slim ribbon turning up and keeping you on the bullish side. Look at the bottom on the slim ribbon PO. This is a level 4 indicator. You can have this if you take the level 4 special that we're offering this week, non-recurring. Matt has a great piece he's going to show you on that. And you could see how in this period where the slim ribbon was positive, you were getting upside momentum signals as it continued to move up. Two beautiful signals right over there on the silver market. So that's how we put together our energetic studies that we use, which really give us a sense for how to understand the cyclical rhythms in the market. Positive cycle, positive cycle, positive cycle. That means a new high after a pullback somewhere coming right over there. So that is the gold and the silver market. I have one more request there for natural gas. Let's put up this natural gas charts. You can see in here natural gas, I mean, just choppy. It made this head and shoulders top and then came down pretty sharply. Let's look at the weekly analysis. Now, this is really superb because this gives you an idea of the cyclic harmonics as we look at them. These are the harmonic families where there's a dominant, an intermediate, and a minor cycle in there. Look at where the minor cycle and the intermediate make their trough right here, and then it moves up, hits a resistance level, and then comes down. Here you can see this cycle has a very positive formation. Here's the halfway point that you can see right over there. There's a little quarter cycle here, a little quarter cycle here, and all three of them come down together here. So when all three come down together, like you see there and like you see here, is where you get your biggest declines. Now, if you notice in here, this is a positive cycle, but look here, this broke down. And actually, this is what Ethereum has done on the daily chart, and that's why I was negative in there. And the highest probability is the rally would fail in resistance and come down again. It did that. So now you could see where these troughs came in and the rally started, and here's the resistance zone. That says it's likely to sell off and decline into this period into February of next year. So I don't trust any of the rallies in here because I think it should fail. When I look at the daily chart right over here, you can see the choppiness and the momentum indicators here. It's not telling us much right there. And then when I look at the harmonics that are in here, there's some overlaying harmonics in here that are 54, 36, and 18 days. And look at where this trough came in and the rally came. So here's that resistance, the lower resistance from the weekly. It could still fool around a little bit in there, but then looking out into December is where we probably have that next trough. So somewhere up in here, it's likely to fail and then to move down again. When I look at the momentum indicators right over here, you can see this is where it was negative, and now we're in a period where the short term on the daily has turned into positive. That's why I say you probably could get a little more on the upside there in the natural gas market. So that is a look at natural gas right over there. And I think I've covered everything in the futures markets. And now I'm going to turn this over to the team so that they can look at the stuff that they're going to in the equity and ETF markets.
Okay, I will take the screen. And we are going to look at MicroStrategy, Tesla, and then the two long-term charts that were requested on Discord. This is the weekly chart of MicroStrategy. Can you guys see it? Yep, good.
Yep.
All
All
right.
good.
So we have fairly short cycles here, 15 bars each. And I worked on this for a member just last week, I believe. And so we had two scenarios. We're inside this weekly cycle timing window where we would expect this cycle to form a trough and begin to move up into the rising phase of the next cycle. So the scenarios were that either we had formed the low or that it would come a little bit later out at the end of October. Well, now you can see that this reversal scout is starting to curl up a little bit, and we've gotten quite a strong move. So the probabilities are increasing that this was the low right here. And we've already tagged the very bottom of this resistance zone, just waiting for the confirmation with the reversal scout turning green. So that being the case, this was a negatively configured cycle. That means that it ended lower than where it began. Therefore, the probability suggests that we would not be able to take out this recent high from back in July, but stall somewhere here in the resistance zone. So we'll see what happens with that. But the levels, the top of the resistance zone here is 393.90, and then we have a 78.6% fib up here at 421.50. If I switch over to the daily chart, here you can see that synced low, likely synced low with the intermediate chart. It has broken through the 78.6% fib and now approaching this prior cycle peak. And then we have a weekly resistance level up here. That was 374.51. So that is the range that we are targeting for this daily cycle. You can see that the reversal scout turned green here, and we've also had an improvement with the slim ribbon that colors the candles red, green, or gray, depending on momentum conditions. And we've got neutral now. And as we continue to move up, then that should turn positive. So we've got a daily cycle timing window out here, 1023 to 1031, where we would expect this cycle to form a trough and then move up. We do have an earnings date coming up out here, so anything can happen there. We will have to see, but right now this is excuse me, this is looking increasingly positive. And now let's go to Tesla. Tesla's had very nice move up in this weekly cycle, 26 bars. We are 1 week inside of the weekly cycle timing window. There's earnings coming up on the 22nd. So anything can happen. This is the 23.6% fib off of this move. We could get down there. We could perhaps get lower. That would be 372.77 would be the top of the support zone here. So this is a very positive cycle. So we would expect, as long as this support area holds, that this would make some kind of a retracement and then have a further increase out here in the next rising phase into the end of the year, beginning of next year. This cycle peak here for 88.54. Again, provided that this decline does not get too extreme, we would expect to be able to take that out. Over on the daily chart, here you can see what this is looking like. Here is the likely daily cycle low. We had a nice move up to 38.2% extension. This cycle right here is in sync with the weekly cycle timing window, meaning that we would expect this daily cycle and the intermediate cycle to form a trough together. And so often those types of cycles show weakness and or breakdowns. So this one's getting very close to that cycle low support. And should it break below that, then that would set up a negative scenario out into the end of that cycle. So we're just kind of waiting to see. There is a possibility that this is a slightly late low. So we will have to wait and see how it behaves once we get a nice little bounce up off of some kind of a support level. Now that may be this cycle low support or one of these levels here. But in general, we are expecting some weakness to develop out into the November timeframe. However, momentum is still positive. You can see here's the reversal scout. It is beginning to curl over, and the slim ribbon is positive as well. The other two that we're going to look at are monthly charts. The first one I'm going to show is EFA. And let me just kind of zoom in here so you can see it better. This is a monthly 26-month cycle. And you can see we formed our cycle low right here. That was back in April. And we got the switch back to positive momentum with the reversal scout. This is continued higher. So here's the 78.6% extension. We are very close to that already. The 100% extension would be the next level up, 102.72 positive momentum, and this cycle is not expected to form a trough until out at the end of next year, beginning of 2027. So we have quite a long time to go. If this does continue higher and moves up towards the 100% extension, then we will put in another extension level above. This one is looking very positive. Let's look at EEM. This is emerging markets. We do have this one on the askSlim focus list. And I did a video, a long-term cycle analysis video on our ETF several months ago when we covered this one. We had our monthly cycle low form right here, again, back in April, and moved up. We had the switch to green with the reversal scout helping us to confirm that that low was in place. We've plowed through the 100% extension level. Next is the 127.2% extension at about $56, and then this prior cycle peak from back in 2021, and that is at 58.29. If we get up close to that, then we can again put in some more levels. This cycle is not due to trough until beginning of the timing window would be May of 2027. So again, a long time to go here. And I'll look at this one a little bit more in depth. We have the weekly analysis here, and it looks like we formed our intermediate term trough here, beginning to move up very early in the rising phase of this next cycle. So this one is looking very positive. We just need to find a good entry point. Over on the daily chart, let's look at that. we might be getting a nice entry point sometime soon because here is the daily cycle timing window. It is running from October 8th to October 20th. So if we get a nice retracement here that does not violate any support levels, then that might be a good entry for a longer term position. And the support zone right now is rising as EEM continues to rise, but it runs from 52.5-ish on the top to about 51.25 on the bottom. Momentum is positive. There's our reversal scout, and the slim ribbon is still positive as well. So this one is looking good. I will turn it over to you, Arby.
So thank you so much, Katie. Let's go ahead and pull up the charts here. Well, we had a couple of semi charts, so we're going to look at the SMH first. All right, so this is the SMH. We'll go ahead and pull up the weekly chart. Absolutely on fire. What you want to see here, where your eyes should go right away, is where this held from. This wasn't by accident, right? It held at the old highs. It held exactly at the old highs. RS was really, really sideways, and then it gave you that signal that it was getting going again on the upside here on 9/8, and that led to this. But it was holding where it should have at the old highs into when there was a low due, and then there you go. And then on the short term, look at that really sideways trade, breakout to the upside, retest right there. Here was your opportunity, and then it was off to the races, right? So at this point, you can see our areas here right on 340 half to 347. And there's a low that's due somewhere around the end of the month. Let's pop over to the SOXX, which is slightly different. This is the SOXX, formed its low here, moved higher, and we can see our areas here up around 290 to around 303 with a trough that's due out here somewhere in the first quarter of 2026. On the daily time frame, really great setup that formed here in the SOXX. Again, sideways trade, build out to the upside. Oops. Okay, pushing the wrong button there. Holding right here, right? Holding above the old highs. And that gave you the opportunity to be involved in that. Okay, so now we have a low that's due shortly here. We'll be looking for a higher low flag to form, and then for this to turn right back to the upside. Again, all trends are up. Jump over to AMD. Okay, so this is AMD. You want to see what's going on here. There is a low that is also due to form here. No obvious low yet, so it is certainly in play for this to have another move down like that, or it's formed low here and will turn up. We have to see what happens in the shorter time frame. Right now, it is holding at the old highs right there, so we'll have to see if it can hold high here and then get another move back up. If it is able to, then that would say that this would be the low. If it's not able to, and it would, move here back down through these areas right here from the 61.8 to the 78.6. It's going to hide the rest of the drawing so you can see those levels right there and right there. Then that would say that, okay, it has not, and there would be still one more low that would only form somewhere around the end of the month. Okay, so you just have to watch. But as of now, it's acting okay, which is why we have a long side trade idea out in this name. And that's all we are going to see here. Slim, I'm going to hand this back off to you, sir.
Okay, that's great. Fantastic work, team. I hope that all of you that are watching really got a sense for the way we put together not only our very unique indicators, but also cycle analysis with those indicators and how that all comes together to be able to give us some sense around timing, projections, and the sum of the evidence that we see based on the analysis that we bring to you. So any questions you have about that, make sure that you write to Slim at askSlim, not sorry, to Matt at askSlim.com, or I had Slim on my mind, consult with Slim AI, which is right on the bottom right of our pages. If you're not a member, then you're going to speak to our greeter, who's on the front page. And if you're a member and you're on the member pages, then that's going to give you just a full amount of analysis that you can do. You can even upload your charts and ask Slim AI to help you with the interpretation or the education around those charts. So Slim AI is just miraculous. Just want you to go take a look at it and enjoy it. All right, I'm going to turn this over to Matt. He's going to bring you a review of our level 4 special, non-recurring, which is fantastic because sign up for it at a really great discount and it won't recur. You'll just have to decide if you want to stay on. Matt, take it.
All right, thanks everybody. Great work, team. I'm going to show you the homepage of askSlim. So if you're not familiar with us and you're brand new, as you could tell, we are a technical analysis firm. So we provide professional technical analysis. And as part of that, you can become a member. And we have several membership options at askSlim. They vary from level 1, 2, 3, 4. And then we also have a standalone day trader comprehensive service that is for intraday swing traders that are looking for price moves that range anywhere from, let's say, 15 minutes or so to even up to a few hours. So a very, very comprehensive day trader service that's standalone. But what you get with our membership levels is the analysis, and the analysis expands and becomes more comprehensive as you go from 1, 2, 3, 4. So at level 1, you're going to get a deep dive into the major indexes, some ETFs. And then as you move into level 2, that expands into our full universe. And then that also incorporates our trader library, our static charts, and many other aspects that we offer with the level 2 membership. And then as you go into levels 3 and 4, that's going to bring in more of the hands-on aspect of what we do, meaning that you'll get to see our trade ideas. You'll get to be able to engage with RV around those trade ideas, understand the process that we use, not only to go through our analysis, but how we translate that analysis then into a trading plan. So that's really what you're going to get with level 3 is that deeper engagement. And then you also start to get in some of our tools that we have, like a ranking system, our market condition monitor, Katie cycle low timing tracker. And then as you move into level 4, which as Slim mentioned is where we have our special today, this is truly a game changer. I know that I'm part of askSlim, but I can tell you that this is fundamentally going to change your life if you're an active trader, because what we've done over the last, starting with Slim more than 50 years ago, is put together a methodology at multiple time frames that is going to give you the best insights into directional bias that you're going to find anywhere. And what we bring to you is the ability to save you a ton of time and a treasure trove with level 4, a treasure trove of custom indicators and professionally designed chart layouts that are going to bring you support around the key aspects of the trade planning process in terms of outlook period, directional bias, entry and exit signals, position sizing, so on and so forth. So what I'm showing you here is just one example of one of the key chart grids that we have designed that encompasses our proprietary indicator set going from left to right. As I said before, we use multiple time frames. And what we're trying to do is get a sense of those dominant directional components, the dominant conditions that then should drive your position bias, right? So we have weekly, daily, 2 hour and 15 minutes. So this is really more for your short-term directional swing trader where you have a focus on the daily and the weekly. So right now I just have Apple up as an example. You can clearly see based on the pattern, based on the momentum indicators that we have a bullish overall bias. So then you get into the shorter duration timeframes to help to be more tactical with your entries, your exits, so on and so forth. And these indicators are not on here, all these the various indicators for show. They bring a specific purpose to the table, and that is around momentum, so directional bias. Some of them are more sensitive to others that can then help with your timing. So we have the slim ribbon is on the daily chart, the weekly chart. That's what I'm showing you right here with the colored candles. And then we have our reversal scout that's slightly more sensitive than the slim ribbon. And then down below here, we have our slim ribbon PO is what we call it. So what it's doing is it's color coding and matching up to the momentum that the slim ribbon is reflecting. As you can see here, it's green. And then what it does is this is very helpful for those looking for continuation opportunities or new entries, let's call it. So we're not giving you buy sells. Again, we're educating you around how these trends play out, how these patterns form, how to participate with the directional bias that's happening right now. But we do have signal indicators that do help with that process. So this is one of those. So we have a continuation signal here as we went into a slightly oversold condition within the confines of the dominant positive directional bias, and then you had the signal pointing towards a continuation. Now, if you have watched all the videos that we've done, if you're part of the video library or you listen to Slim, Katie, myself, Arvi, we talk about our Fibonacci swing high, swing low techniques. You go from the swing low up to a swing high and then down to another key swing low, and you can start to see how the pattern, so this dominant positive directional move that then had a pullback into the slim ribbon, so the middle of that slim ribbon. Then you had the continuation signal with the slim ribbon PO. And see, the thing is, this isn't lag. These aren't a lagging process. So you have an understanding of the dominant directional condition. The slim ribbon's telling you that you're still in a positive mode. You understand how to place your Fibonacci swings. So in advance of the next move, I'm already prepared for my opportunity, my setup. And I'm looking to be long, and I'm thinking about position sizing. I go to the left, I look at the weekly chart here, which is showing me a positive condition. So I'm more willing to then build out my position to a fuller size. If I'm going against a dominant condition in a larger time frame, then I want to keep my sizing smaller. I want to keep my stops tighter. But this is an example of a real life how we would play it out. And this is time and time again how that works. And you can see we get up to 100% fib extension. So even though this is a positive directional bias, at this point, for me, as I consider an outlook period, I'm going to start going into the 2 hour, the 15 minute. I might be doing more day trading or near-term swings because Apple's maximized a lot of its opportunity in the upside. Now, still extremely strong. This is where the cycle analysis could come in and help me out. I don't have that on here, but I'm showing you how this grid itself in its raw form can be so helpful, so much information. We have the MCI, the OBI, other directional bias indicators. This is one of the many grids that come. This is a standard key grid that will come with the level 4 package that we offer. So we have a whole section on level 4 that brings this information to you and allows you to import these into your own thinkorswim platform. But there's two quick things I want to show here, and that is I'm going to show you we call this the askSlim bias heat map. Okay, so that's this here, and it's a proprietary structure that we've put together with our indicators. So our custom indicators, I have reversal scout, daily reversal scout, daily slim ribbon, then I have a 2 hour reversal scout, MCI and OBI. And then I have a watch list of symbols, and I can quickly just click on the top to sort if I want to see which are the most bearish or bullish of any one of those symbols based on the column header. So at this point, I clicked on the 2 hour reversal scout. Now it's going to show me the ones that are bearish at this moment. And then also, if I click it again, that's going to show me the ones that are bullish. You can do this with the MCI, and I can get that ranking. So the MCI ranks the bullish or bearish degrees anywhere from -100, which would be the most bearish, to +100, which would be the most bullish. And you can see that. I love the MCI because it gives you this just straight value that tells you that strength that it has, and it's made of multiple time frame components. And you can use these tools. Again, this is a bias heat map. It's all for us. It's so much about what's that bias, because you want to be on that right side for a longer ride. You want to be able to identify when there are those pullbacks that can happen, and then be able to set yourself up for that next move. When's that next swing going to happen? So with this tool, though, the bias heat map, if you have the raw grid, as I used before, you can just click and you can link these up. And for example, if I just double click over here, that's going to instantly pull up BABA for me. And I can just go through one after another and quickly see if any of these are setting up for me right now and make almost decisions instantaneously. Obviously, that comes from the experience of going through this process, but we have so much resource that will guide you on learning it so that when you get to that point and you click through, you can make decisions very quickly because of the work you've put in beforehand. But this is an amazing setup. This is, again, one of a number of them, but this bias heat map, very powerful for getting yourself situated and quickly going through and filtering opportunities. And the last thing I'm going to show is our market conditions monitor here. And I'm going to share a different screen. Okay, so this is the market conditions monitor, and I've set this up so I split screened it. And what you can do here is, so I duplicated and split screened it, and I want to go to the intermediate time frame because there are a lot of questions on, well, how do you participate in these stronger moves, and how can you use the market condition monitor to send me alerts when there's a new opportunity? Because as I showed with Apple, but this is MU, what we're really trying to do here is we're trying to participate in the strength of this dominant condition, as you can see in the weekly, daily, but where's that next swing? So what we're doing is we're going to go into these shorter duration time frames, look and find strong stocks as an example, or you could go to weak stocks, but I'm talking about strong stocks when they're having these minor pullbacks, and you can then set an alert for yourself so you'll be notified on our desktop app when they would return to a more bullish condition. And you can even go down to the intraday as a level 4 member and be notified when it goes to slightly bullish, let's say from a neutral or bearish condition. And that might be that next opportunity for participating in the next impulse move. So as you can see here in the 2 hour, we shifted, reversal scalp goes positive, the slim ribbon goes positive, and you could set up an alert for that to happen based on the conditions that are changing. So if I just look at IBB, not sure what the condition is at the moment, but I'm going to put this into an intraday mode for the moment. And okay, so it's neutral. So what I would do here is if I was a near term or even day trader, I would set this up and I would put in here slightly bullish, and then I'll be notified when IBB shifts back to an intraday condition of bullish degrees, and then I can make a decision if that's going to be a day trade for me or a short-term swing trade. So extremely powerful tools. Again, a treasure trove of setups and indicators, chart grid layouts that this team has built over the years. Again, saving you hundreds, if not thousands of hours of effort and time. And it's probably likely that you wouldn't be able to just figure this out on your own because this took a team to build this out, starting with, Slim decades and decades ago. All right, that's the level 4. Oh, well, the price for level 4 is a huge discount. It's $99, as Slim mentioned. That's 37% off. So it's normally $159 for $99. So it's a tremendous deal. You can just go to the homepage of askSlim, and I'm going to pull that up one more time here to show you where you can go and make that purchase. It's right up here, special offer, save 37%. It's $99 versus $159. Again, I can't even put a price on the value of everything that you're going to get, both in real time on an everyday basis, and then just it's like a kid who gets a free pass to go into Toys R Us years ago, and you're going to get access to all these amazing tools for $99. So there we go. Back to you, Slim. I think you're on mute.
All right. Unbelievable. I love the way you put together the heat map with and link that up to the chart grid because, man, was that a great way to see what was strong and weak and why, and then to look at the analysis on it. What a great way that is.
Well, you've always challenged us to say, okay, so how do we, at a glance, once you understand the process, as a trader, you got to be efficient, effective, and so when you combine those tools, you really have an advantage, I think.
Yeah, it's great. You can do a ton of analysis in just a short period of time.
Yep.
Then make notes, and then even, you can build another watch list that just is let's say a bullish watch list or a bearish watch list off of the work that you do and have that refined down. So it's just fantastic. And man, $99 for the first month and you get all of that. Man, crazy and non-recurring, and then you can just decide if you want to stay. So it's great illustration on that.
All right.
All right, we're going to move forward. All right, stock market analysis and projections. We'll start out with some important information. Read this slide. It just tells you how we approach our analysis and about you using what we give you or what anybody gives you as far as their own interpretation of the markets and the importance of your own trade ownership. You must own your own trade. You must then manage it on your own. All right, market brief for this week. Well, stocks index stayed very strong on mixed background news. Government shutdown, well, it's in our third day, and they're fighting like 8-year-olds. Anybody have seen anything on social media that they're putting sombreros on the heads of the memes? I have no idea what that means. I think it's ridiculous if this is the way they're going to deal with the shutdown of the government. But anyway, history shows that is really no effect when the shutdowns are on. And you might think, well, shutting down the government would be a negative, but you could see the stock market now. It is completely ignoring it. U.S. GDP was stronger than expected at 3.8%, but the ADP jobs was a big miss. So you have conflicting economic information there. And the unemployment report today was delayed because of the government shutdown. So that might have been convenient. So we don't get to see how bad the employment situation is. And I do think it is worsening considerably. Mega caps, they're mixed. AI strong again. Netflix down on Musk is on a campaign. He unsubscribed and is trying to get other people to unsubscribe from Netflix based on the woke content or how he interprets content as being woke. And there is some huge amount of unsubscribing going on, as I have read. The reports show that. I don't know if that's real, but that's what I'm reading. And that has been weighing on the Netflix stocks. Tesla also down. They had some good numbers. Now, this is the end of the incentives, and thank heavens for that. I don't want to pay for anybody else to buy their EVs anymore. I don't think any of us should. And I've always been against government welfare, and I think that that is a form of government welfare. So there should have never been an incentive for anybody to buy a car, an EV, or an incentive for anything. The government should stay out of that and let the free market determine what's a good product and what is not. Well, that better sales that we had seen now came from people running to buy them before the incentive expired, $7,500. And that definitely has pulled demand from future sales. Tesla's going to have to cut prices to offset that, but that probably will not help. And that's why the stock has been very weak just in these recent days. Indexes up about 1.5 now to almost 3% as the market has gotten stronger as we have done this report. And Russell's the strongest, up close to 3% on the week. That actually is good for the market because you can't have AI leading the way up all of the time. And when we get into rotations in bullish markets, that tends to feed the upside because they can always find some group that's doing better and somewhere to switch the money into. And that's really what we've been seeing this week. So that's the report as of around midday here on Friday, October 3rd. Let's switch over and we're going to do some talk about the market. But first, before we do that, take a look at this. This is a look at the top 8 weighted stocks in the S&P 500. These top weighted stocks equals 40% of the indexes. Yes, 40%. That is incredible concentration, something that we have never, ever seen before. Even back in the 70s when the market was making a secular bull market peak and went into that long 10-12 secular bear market, those Nifty 50 stocks didn't even get close to this type of concentration. And essentially, when you are trading the stock market now, trading the indexes, you're trading these 8 stocks that are 40% of the S&P 500 index. You can imagine the earnings concentration also, as the other 92 stocks that are out there have just so little effect on what the stock market does compared to these 8 stocks. So if you're trading the markets, you've got to be looking at these 8 stocks. And that amazing concentration, of course, has other effects on the market. And I'm not talking about valuations ever again, because valuations simply don't matter. So I'm not going to talk about them. I'm not going to say one word about valuations. And don't look at this slide. I don't want you to read this slide, because that would be a bad thing, because I'm not going to talk about valuations. I'm not talking about them. And don't read this slide. Let's move on. All right, let's look at the stock market. We're going to look at the S&P 500, two scenarios: multiple time frame analysis and projections on the S&P 500. We'll look at cycle analysis and our indicators, and we'll talk about how we use them both together. And then we're going to look at the VIX, the big picture, monthly, weekly, and daily. And then we'll also look at our market condition monitor, which just gives such valuable information. Earlier in the show, Matt demonstrated that when he was talking about our level 4 special that we're running. So we're going to look at this. VIX is going to show us that it's in a time frame when it certainly is due for some significant upside moves. And we will see that as we look at these charts. So we're going to switch over now to the charts, and then we will get to the MCM next. So I'm just going to reduce this and switch us over to the charts. As soon as I find those things, I got so many layers in here. All right, here's the S&P 500. Here is the weekly chart. So the first thing we're going to look at is the amazing rhythms that are in the market. And then we're going to look at the indicators that we look at. So right now, what we have is a condition that we call a swamped condition, or a extreme right-hand translation. And that is, as you could see here where this low came, that this next cycle has rallied all the way, almost all the way through this whole duration of this cycle. So you can see in here that each of these rhythms in here are very similar. Here was that trough, here's a trough, here's a trough, here's a trough. What's important when we look at these is that when the minor and dominant cycle come down together is where you get the bigger corrections. This was a little shorter cycle. So this was 9.4% down. This was 10.9% down. This was about 6% down right over there. And this one right over here last October, which is a very similar shape to what we had over here, we were looking for about another 6% down, and what it did was fell only about 3%. So we have to consider that this decline, as we saw a year ago, could be similar to what we see now. Now here you can see these yellow zones are these periods of risk. This is where you get the potential big correction. Again, this 6% correction here, this only 3% correction, and of course a bear market well over 20% in this one right over here. But this one, we leave almost no time. And if you look right over here at the note I have right over there, whoops, the daily cycle sync is either late October or early November. So in other words, there is a cycle on the daily chart that syncs up in this period about a month from now. We'll call it 3 to 5 weeks or so. That is why this point's over here. Now, the decline in here, you can see we're showing something similar to this or this. That's a very bullish look at the market, where it says you're probably going to make some kind of a peak in here and get some kind of a very modest correction right here and then be moving up again. I'll look at the daily chart and we'll get a little more granular on this so that we can see some of the numbers on there. But this, only some 3% would only take you down just under 6,500 right in here, looking at that, which is just a very bullish look. And then once that's over with, of course, it would be moving up again. If it wanted to continue spiking right now, after it has hit this level right there at 67.65, which we put up on the charts, some weeks ago, but I thought no way it could get there. But here it is. Here you could see the next level right over there is at around 69.40. That could happen before this decline comes into place, because we don't have any sign of a top. Here is where your reversal scout, call this the RS, turned up right over here. That tells us about this trough right there. And when you get a decline and there's not even a decline in the reversal scout, it just shows you how strong the market is. And once this turned up right over there, it has not given any sign of weakness whatsoever. And this momentum is what's driving the advance that we see in the shorter term. So again, a corrective process in what we call the period of risk, where this aligns with the daily chart and some kind of a pullback in there. Let's look here at the daily chart. So you can see in here these rhythms. Now these cycles right in here, you can see the green, that's essentially the 16-bar Russell cycle right in there. And we have a 23-bar cycle right in here for the S&P 500. This has had no decline in there. This was only the 16th day, and the probability of that being meaningful is small. Same thing happened over here. You know, it pulled down right over there to a similar time frame, then had about 5 or 6 days up and 2 big days down. Now look at the nature of these cycles. This had a few days down, this had a few days down on these very positive cycles that keep trending up. Here's a couple of down days, a couple of down days, and that's probably what we're going to get in here. Just a couple of down days, probably sometime next week, and then the market turns up again. This right-hand translation is the same thing as we've seen here and here and here and here. Why does the right-hand translation occur? It occurs because of what I showed you on the weekly. This upward momentum will not allow corrections here on the shorter term. This VTL that you see right over there, it's called a valid trend line. You can learn about those in our cycle analysis workshop. That you can see is where it's been, you know, coming down to, and you're going to have to get a break to the downside to give us anything negative. But with only a few days left and supports right in there, it's very likely not going to do that now. So we're probably going to get more positive formation following this little potential pullback that we see in there coming over the next 2-3 days. The scenario that we're going to look at 2 scenarios. See, this cycle syncs right over here with the weekly early in November. This is this time frame right over here. That's from the last couple days of October out till about the 2nd week of November. And that would mean there'd be a formation in here that tells you that a peak is setting in and that weekly pullback is in place. Let's examine what those possibilities are right now based on the sum of the evidence. Again, what we have in here is the slim ribbon positive, and you can see how the slim ribbon gives support along with the VTL. Here you have the reversal scout that you can see right in there and has been bullish except for this little tiny dip right in there and telling you how positive things are. Look on the bottom here. This is your option bias indicator. This is a fantastic indicator, whether you're an option trader or not, but this said keep your option positions biased on the long side. It's been very clear. You look at all 3 of these indicators that we're looking at in here, and they're saying stay on the long side the whole time. No matter if I'm looking for any kind of corrections, that doesn't matter because the market's wasn't setting up for them yet. So this only has a look back period in here of about 6 months. You can see back over here where it was red, but it would get too many dots in there because we built this to only give us a look back of 6 months in there. So this is a very bullish scenario that we're looking at. So if it were to continue in this bullish scenario, and we're going to look at that possibility, we're going to look at the positive scenario here. So this is essentially what it would look like. If it followed that period like October a year ago, you have that little correction, you move up to new highs again, and then maybe you pull back 3 or 4% into this period right over here, maybe back down only to similar levels to where we are now. This would be minimal effect from the weekly corrective period. So this period right in here would occur with a little bottom, further upside move, and then moving down and not moving down very far. This is, of course, a very bullish scenario and in line with what we've seen in the markets now and in line with a continuation of the bull market past this weekly corrective period. Now, if it weakened and things started to change, what would happen would be we'd start to see the 2-hour chart weaken. We would start to get some sense that these were beginning to roll over. Our option bias indicator here would then turn neutral. First, yellow would be in the middle here, and then potentially getting red. So that would be a more negative scenario. What would that look like to us in here? Well, that would look like this, where you had this decline and then this rally occur. Because of the shape, it would probably make a new high. But then this would be the normal effect from the weekly corrective period down to some support levels. So this support level on the weekly is just under 6,300. That would be a 6.6% decline, very much in line with the norm that we have seen in these bull market years. A little more dramatic one would be down to this level at just around near 60 on the S&P 500, 6,000. That would be about a 10.7% correction. Based on the strength that I see in the markets now, I think that's not a high probability, but a normal correction right over here down to that just under 6,300, that would be a pretty normal correction period in a fairly strong bull market. So that's this corrective period here during the period of risk on the weekly, and this would be the more negative scenario, which is really pretty normal for a corrective period right there. Which one do you think it is? Well, I don't really know if you can evaluate it any differently than I have. Some people would say, well, it's just bullish. It's just going up. It's just going to go up. AI is strong. We're in a new paradigm, all of those things, and they're just going to go up. So don't talk to me about anything negative. And I couldn't even blame you if that was your response to me. So that's the more normal period of correction right in there. This is the more positive shape that it could have, where it has a little correction, comes up and then pulls back 3-4% right over there and finishes that weekly. And this is where we are right now. Just not sure quite how to determine that. Now, let's take a look. Remember that this corrective period for the weekly chart comes out over here into November, or late October through the second week of November, when we expect to see the completion of that weekly cycle. Look at this. Now, this is the daily S&P 500. This goes back over here to April, where the market made that corrective bottom right over there, turn neutral, and then turn green. And this is the slim ribbon on an area chart. Look at the slim ribbon PO as it keeps telling you about the upward resumptions in there. This is so phenomenal. And Matt gave you some review of this back looking at level 4. This is a level 4 setup when you look at this. So take advantage of our special $99 deal on level 4. And this, you'd be able to set this up on the Think or Swim platform, which is, I think, just a great way to see the market. So there you see the daily. Let's take a look at the 2-hour. So this is a very unusual look in here, and that is looking at these 23-day cycles on a 2-hour chart and how they overlap, how it looks on a 2-hour chart. And here again is this period that points to the next trough, which is plus or minus a few bars on a 2-hour chart out to October 7th. So we'll say October 6th, October 8th, somewhere in there, sometime middle of next week is where that corrective period on the daily chart would line up. We would look for the slim ribbon in here to lose the positive structure on the 2-hour chart, turn negative. Now, in a bullish scenario, the bottom MCI, the market condition indicator, that probably will not budge off bullish. Because this would be such a minor decline. But the slim ribbon PO, that could turn negative in here, and we could start to get underneath the slim ribbon, which you can see is often very good support. You can see how it found support right in here the whole way. Then you got a little negative right in there, and this is that 16-day dip that I said really was too early to be where I thought the cycle low had come, and that it was more likely to come out over here. And again, this next cycle right over here takes you out into late October right over there. There might be another cycle after that before we finish this daily pattern. So this is the look at the sum of the evidence, looking at the S&P 500, where this correction is due in here. and we have no sign of it yet, and all the indicators are positive. This formation is positive. I gave you the two scenarios. This is the very positive look at momentum and all of the indicators that have kept you on the long side of the market. And then this 2-hour chart right over here. You can actually build this same type of a chart grid, and I can even send it to the people who are level 4 members who like to look at things this way. So take advantage of our level 4 special. Let's now take a look at the VIX, because I think the VIX is very important to look at when we're looking at these charts, because especially when we're talking about the potential for some correction. So this is a monthly on the VIX, and this is really pretty spectacular. Look at the cycle rhythms in here. They are really clear. And we are in a period right now where it is pretty likely that we could get some upside spikes in implied volatility. So right now there's a lot of complacency, and I'll show you that on the weekly and daily chart also. And these gray oval periods are periods where those cycles are sinking right in there, and then you can get some upside. You can see you got this big upside spike right over there, temporarily lasts for a few minutes. This is a monthly chart, of course. And we're in this period where it's very likely we're going to get some upside spikes in implied volatility over the next year, 2 years, 3 years. So I think we're into a period now where we're in a super complacent period right now, as people are very comfortable with 40% of the S&P 500 being just 8 stocks, and they can just keep pouring their money in there. But we're going to be in a period for some years where we can see some pretty big spikes in implied volatility, hence some pretty big declines in the markets. Let's now look over as we switch over to the VIX on the weekly and the daily. We'll come back to that in a moment. And let's just go to the VIX right over here. And let's look at the weekly pattern in here. And you can see that there is a consistent rhythm going on right in there right now. And we're in the period where we would expect that implied volatilities would pick up pretty significantly. We have actually a saucer bottom being set up in here, and I'll show you that on the daily, which often sets up a pretty good move, saucer bottom, saucer tops. But this is the weekly. We should be getting some upside in here fairly soon. You can see in this weekly cycle, we're now 6-7 weeks into it. Here you were, did a pretty similar thing, and then there was a pop-up right over there. Here you did a pretty similar thing and another pop-up right over there. So that would follow with the scenario of a potential decline in the market for a correction into later October and into November. And now when I switch over to the daily, and I'm going to put up the daily chart right here, and you can see that saucer bottom that's forming in there. And this is very likely to give you some significant upside moves. Pretty soon, you can see in the saucer, this was only a move up to 20. This was a move up to 22. This was a move up to 22.50. I think it's pretty reasonable to expect that kind of a move to be coming fairly soon. You can see in here this cycle right over there, and it has potential for a little dip right over here. This right over here is October into late October, and this aligns with the time frame that I looked at on the daily chart and the weekly in the S&P 500. So I think this period over here is going to give you an upside spike in applied volatilities as the market then does have that corrective period. Is it going to be 3%? Is it going to be 6.6%? Or is it going to be 10.9% or whatever it was I showed you back over there in the S&P 500? I don't know. I just know that with the present concentration that we have in the S&P 500, if those stocks start to get weak, the decline can be pretty sharp. So that's a look at the VIX and the monthly, weekly, and the daily. Let's take a look now as we switch over to our market condition monitor. I like to look at this every time we do this because I think it's important to see. Here I'm looking at short term, and you can see in here just very bullish readings that you have in here on all of the indexes. On the intermediate term, you can see that very bullish. The SPY actually turned very bullish August 11th, and that was a step up from bullish to very bullish. So you can see that these have been, very bullish for a long period of time. The short term has been very bullish, ticked up from bullish, and the near term, which is just for those that trade a few days, swing is very bullish. And your intraday traders, and this is what you get with level 4. You can see right over here, look what's happening. So SPY and QQQ is just now turning downward in here and giving you some sense of neutrality. Is that going to mean anything on an intraday basis to the longer term? Well, that's yet to be seen. What we first want to see is this near-term change to neutral, and that would be an indication. And what I want to do is kind of notify myself when those are going to turn neutral. So I'm just going to put that in there. Let's see, I have that in there. I'm going to put it in all of them. Neutral. So the app is going to notify me when these go neutral, and click that right over there. And then we're going to get a sense for when these things are changing. So we have an app you can download, and it'll send you notifications right on your PC. So that's just a great app. So this is where we are. What are the really good stocks that we're looking at right now? Well, let's look at the trade setup conditions in here, and you can see the ones that are very bullish. Again, I'm set up now on the near term, so I want to go to short term right there, and there's your very bullish stocks right in there. And you can see how they've done exceptionally well. What are the stocks that are just turning bullish today or the last couple days? Then you can get to that by setting this to the near term right over here. And let's just look at the ones that have turned very bullish these last couple days. And you can see that the ones that have gone, whoops, they're not sorting correctly. That's where I want them right there. So these are the ones that just in the last couple of days have turned very bullish on the near term. Let's go to the short term again and look at the ones that are negative, or the ones that are very bearish right there. And you can see in here, Kimberly, XLP, that's the consumer staples, Procter & Gamble, Katera, Energy, Global, X, Argentina, that's interesting. The S&P Global right there. Intercontinental Exchange, wow, very bearish. Domino's Pizza, Colgate, T-Mobile. You can see as we go down here, these are the ones that have turned very bearish now in a very bullish market. So that gives you a heads up for the ones that are pretty weak. That's everything I'm going to show you on that right there, as we looked at the MCM, and that, of course, has our proprietary algorithms built into it. I want to remind you that we have our top tier level 4 trial on right now. This is for first-time subscribers and upgrades. You get everything that's on this page, everything that you show me, that I showed you that I'm using right now for the analysis. The team used it all also. That's a special 1 month level 4, 37% off. It's just $99. It will not renew. It's not recurring. We're not going to bill you again. We're going to let you look at all of these things for 99 bucks for 1 month, and then you can decide if you want to stay on. If you don't, we get it. Maybe you want to try a different level. Then write it to Matt at askSlim.com. You can ask him any questions, or you can decide at what level you want to stay on. And if not, well, thank you for trying that for sure. That is everything that I'm going to show you. Just click on the top right over there to get to that level 4 special offer on the top right. And team, we are all done.
That was excellent. Great work, everybody. Appreciate all of you members that are in attendance as well.
Yeah.
Thanks, guys.
All right.
Have
Thank
great
you.